Welcome back everybody to another video. I'm Andre Diaz. If you guys don't know who I am, I've been day trading for 4 years and I'm just a serial entrepreneur, day trader slash content creator, and overall I just want to be able to give value and be able to change lives while doing so. And in this video I want to talk to you guys about the importance of understanding the power of having a positive and good risk to reward ratio when it comes to trading. Risk management is very key and not a lot of people put a lot of emphasis on how important risk management really is. You can have a shitty strategy, you have a shitty system, but if you have impeccable risk management, you'll be able to make so much money. I promise you. And that's something I've personally had to learn from many mistakes. Like I told you guys in the beginning of this, I've been day trading for 4 years, and for 2 to 3 of those years, I was making mistakes after mistakes after mistakes after mistakes. I didn't have good risk management. All I was focused on was trying to find the perfect strategy, the perfect system that was necessarily never even real. There was no perfect system. There was no perfect strategy. If I would have been practicing risk management from the jump, I would have been way better off. So that is why I want to be able to explain to you guys different systems that you can put in place to be able to have a great risk management plan and how to position yourself to be able to succeed as a trader using risk management. There's a lot of different things when involved in trading that you have to be proficient in, such as building confidence, building patience, having good risk management, having a positive, well-rounded edge. You need to have a good edge. It's one thing to have a 50% chance that you're going to win, but you want to have a 60 to 70% edge. So a 60 to 70% chance of winning a trade. And in order to get that, you're going to need an edge that is more than likely going to consistently be there and consistently play out to consistently give you those results that you're looking for. So once you have all of those things in place, that is when you got to start forming your risk management plan. And now, depending on the size of your account, that's going to determine how much you're risking per trade, how many trades you're allowing yourself per day. And this comes with experience, because me personally don't want to take more than 3 trades in a day. That's me personally, because I know anything more than 3, I'm more than likely going to go on tilt. I'm more than likely not following the plan, and I'm more than likely not going to net positive results from doing that. Now, that's me. I know that because I'm not patient and I know myself. And I told you guys I've learned from many losses and I've learned from my own experience. But you're going to have different experiences. You're going to be different. You may be more patient. You may need to take less trades because of your personality. You may need to be able to take more trades due to your account size. It all comes down to you. You got to be able to understand yourself. So depending on whatever your account size is, whether it's $1,000, $10,000, $100,000, you need to figure out what is a appropriate amount to risk per trade that you are comfortable with, that you are going to be able to handle. Because at the end of the day, if you have a $1,000 account, you're risking $500 per trade, your emotions are going to be through the roof trying to trade each trade. You got to figure out that sweet spot that you're going to be able to handle yourself accordingly, that you're going to find confidence in it. But that only comes from trying different things, trying different risk management plans, trying different risk per trades, and trying different styles of trading. And that's what you got to do in the beginning. You got to try different things to figure out what you like, what you gravitate towards, and what is going to be best for you. Because like I got to keep telling you guys, we're all different. We're going to have different things that each and every one of us are going to be benefiting from. May be good at some things versus you may be weak in those areas. Everyone is different. You got to structure your journey, structure your growth based off of yourself and not other people. People tend to do that. They tend to take what other people did to fix their trading and try to use it on themselves. When in reality, you got to figure out what is wrong with you. You got to figure out where your weaknesses are, and you got to strike those areas, and you got to focus and target those areas to make sure that you can then strengthen those areas to just perform better overall. We want to be in the game long term, and in order to do that, we have to be able to stay in the game. And being able to stay in the game all comes down to having good risk management. So like I said, risk management is understanding how many trades you're allowing yourself per day, how much you're risking per trade, and it can also have different things such as how much you're allowing yourself to risk per week, how much you allowing yourself to risk per month. These are all things that you need to have already. You don't want to go into the week thinking, what is the worst that can happen? No. That's not the mindset you want to have. You want to know what the worst that can happen. It all needs to be structured. You know that if you lose 3 days in a row, you're not trading that 4th day. You know if you win 3 days in a row, you're not trading that 4th day. You know that it's not possible to win 4 days in a row because you have a system in place that doesn't allow you to. Because why? Maybe on that 4th day you tend to overtrade. Maybe on that 4th day you tend to over risk. It comes from understanding yourself. That 4-day rule may be a 2-day rule. Maybe you have a rule to where if you lose 2 days in a row, you can't trade the 3rd. If you win 2 days in a row, you can't trade the 3rd. You got to test different things. See what works best for you. See what you perform best in. This is what the game is. The game is you versus you. You got to try different things to figure out what you are best at, where you strive, where you are going to be the best and perform the best. As simple as that. It's a you versus you game, not you versus the market, you versus you. The market is just there to be able to put our edge, to extract our edge. Our edge is our cookie cutter. We have a cookie cutter and we're constantly doing the same thing, doing the same thing, doing the same thing. You need to have these rules in place to keep yourself from self-sabotaging, because that's what it is. The market isn't going to ruin you. The market isn't going to blow your account. You are. You're going to overtrade. You're going to over-risk. You're going to do dumb shit. It's always us. The reason we fail, it always comes down to us as traders. And the moment you realize that, everything becomes easier, because the only thing you can blame is yourself. At the end of the day, in trading, if you lose, it's your fault. If you lose a trade, it's your fault. If you didn't follow the rules, it's your fault. You can't blame nothing else. No matter how hard you try to blame something else, at the end of the day, you can't. This is a you versus you game, and there's beauty behind that, because if you know it's your fault, then you know there is a way to fix it. You know you are in control, and you are capable of changing it, and you are capable of getting those results you're looking for, because you are what's in the way. So once you can conquer yourself, once you can get that risk management plan, put those systems and processes in place to keep you from self-sabotaging, to keep you from basically ruining yourself. Prop firms, brokers, banks, everything, they bet against you. They don't trust you. They don't have faith in you. They bet against you. They bet that you're going to make yourself fail. What do you think casinos do? They bet that you're going to make yourself fail. They bet that you're going to get greedy. They bet that you're going to essentially self-sabotage yourself. So to be successful as a trader, you need to have impeccable risk management. And how you have impeccable risk management? By having self-control, being able to listen to the rules, follow the rules. Because it's one thing to have good risk management plan. It's one thing to have a good system. But if you don't follow it, it doesn't mean nothing. A plan is nothing if you're not actually following it. Laws don't mean nothing if you're not following the laws. At the end of the day, they're there to not be broken. They're there to help us. So you got to be able to sit there, do what you're supposed to, and get to work. So when you think of positive risk reward, it's understanding that if I'm going to risk $100, I at least want to make $200 to $300. If I'm risking $1,000, I want to be able to make $2,000 to $3,000. So essentially, I'm looking for a 200 to 300% return on every single trade. And why do I do that? Because there's some people that like to go for one-to-ones. And what do I mean by one-to-one? Meaning if you risk $100, you're only looking to gain $100. And me personally, I don't like that. Why? Because if I win a trade and then I lose a trade right afterwards, I'm essentially back to nothing. I'm at break even, and the win didn't really do much for me because I'm back to where I started. But if you have a positive risk reward that you look for 1 to 2s, 1 to 3 minimums, if I take a win and then I take a loss after, I'm still going to be in profit. Why? Because my wins are 2 to 3 times larger than my losses. So if I take 10 wins and I take 10 losses, I'm still going to be able to make money. But if I'm taking one-to-ones, if I'm risking $100 to make $100, if I win 10 trades and then lose 10 trades, all of that was nothing and I'm back to square zero. But if you have that positive risk reward, you can even make more. You can end up in profit losing more trades, and that's the importance of it. So I'm telling you guys, one of the main things that I was able to do to be able to see more success in my trading, to be able to see more profitable trades, to be able to let my trades actually run, was to have a positive risk reward. And I specifically target 1 to 2s, 1 to 3s. So if I'm risking $100, my target is going to be $200 or $300. That's it. No less, no more. Simple as that. When it gets to the 1 to 2, I'm taking it off. When it gets to the 1 to 3, I'm taking it off. If it goes to 1, it can't even go to 1 to 4. I can't even say if it goes to 1 to 4 because I'm not going to allow it. Once I get to that 1 to 2, once I get to that 1 to 3, I know that it can be taken away from me. So if it gives it to me and that was my target, I have to take it. And what that does is it makes it so all of my wins are 2 to 3 times larger than my losses, right? So if I'm doing that, if I win 10 trades and lose 10 trades, I'm still going to make money. Now keep in mind, that's when having a positive edge, having a good system comes into play, because if I'm winning 10 trades and losing 10 trades, that's only a 50% win rate. But if I have a good edge, I may be able to win 60 to 70% of my trades. So now if I'm taking 10 wins, I'm only losing 7. And if all my wins are 2 to 3 times larger than all the losses, I'm going to still end up making money even with losing trades. And that's the name of the game, because as traders, we know losses are guaranteed. We know they are going to happen. It's our job to be able to handle those losses, to be able to manage the losses, to have control over ourselves when we have those losses. That is how we become successful traders, and that's how we stay in the game to be able to trade another day. Risk management is everything. I'm telling you that right now. Focus on the risk management if you haven't already. Have a great plan, execute it every day, and build and try to improve it just a little bit every single day. And I promise you, in 6 months, 12 months, you're going to see a drastic change in your trading. And I promise that because I followed the same rules. I went through the same thing. I didn't have good risk management. I was risking too much every trade. I had negative risk reward at one point. I would risk $100 and only make 50. And I guarantee if you're a trader, you've probably done the same thing, but it's all about learning from it. Losses are going to happen. Setbacks are all going to happen. It's about how we're going to handle ourselves and how we're going to continue to move forward. Don't let them define us. We let it build us into who we want to be. If you guys are interested in learning how to trade, make sure you check out the free course. It's going to be in the description. If you just want to get involved in trading but don't have the money, make sure you check that out. And if you do have the money and you want to trade live with me in the VIP Trading Network every single morning, where you can get our live trades, take our trades while you learn, and get mentored by us and everybody in the team, make sure you join the VIP network. It's also going to be in the description. So with that being said, hopefully this video gave you guys a good insight to risk management and understanding the importance of risk management as a trader. Like, comment, subscribe if you haven't already. Make sure you stay safe and fear being average. And I will see you in the next video.